For giving me this opportunity to present in this forum. And I will start with one assumption, or rather clarification, that this is a very static framework. Basically, I'm not using the dynamic framework and that thing. So control L. So what is my research question is that what will be the likely or possible revenue impact of GST rate restructuring on the revenue mobilization? Now, the thing is that we have to understand that what are the sources of revenue impact of the recent GST rate restructuring. So what I found is that there will be four positive distinct effects of revenue rate restructuring on GST revenue collection. Mainly, there will be a price elasticity effect. When the prices fall on a large number of commodities, as you know that 28% tax is reduced to 18%, then 18% taxes are also reduced to 5% and exempted. Some of the 12% are all gone to 5%. Even the 12% rates are also exempted. So there will be a huge price elasticity impact, and not only own price, cross price elasticity impact on overall consumption basket of goods and services, and it will have a also income elasticity effect, because the major driver of this rate rationalization is that we thought that external sector there will be a shock due to tariff, and also there is a expected that our to fall in our export to boost our economy, or some kind of stimulus that we are thinking that we can. And we have, Musumiti, that I cannot say that effective demand problem is not there. We have effective demand problem, and we want to increase the consumption so that economic growth will happen, and it will be distributed across the economic agents in terms of wages, salaries, interest, dividends, profits, and like that. And that will have the impact on our consumption basket in the, say, medium to long run kind of thing. These two effect is going to impact our scale and composition of consumption basket, because, and it will impact the revenue prospects of the state, because every state the consumption basket is different across the tax categories, and it will have an impact on their revenue side of the thing, because GST is largely a consumption based tax. And the other thing is that formalization of the economy. Why it will be a formalization of economy? Because the my output tax liability is going down, and my input tax liability, if it is high, so I will take the registration in GST registration, because I will get the input tax credit fully, and my my output tax liability will be less. So I will take the registration. So it will induce me to take part in the formal supply chains. And the second thing will happen that as the tax rate reduces, what happens that the cost of, if we assume that the cost of tax evasion, because when somebody is evading the taxes, then he or she has to incur some cost in terms of tax planning, in terms of bribing, in terms of some kind of side payments and all kind of things. And given the, after all these payments, he enjoy a premium of evasion. Apart from his, that premium is going to fall down as my tax rate is going down. If we assume that his other payments, side payments are remain same, because he is evading, whether it is evading any amount or not. In that case, what will happen that he will be honest and he will voluntarily pay the taxes rather than evading the taxes. So there will be an impact. These two last two effects will have a tax environment. It will improve our tax environment, and that will induce better compliance and tax collection kind of thing. Then now we may have to, and negative impacts of revenue rate restructuring because the thing is that majority of the services are still in the 18% category, and majority of goods are now 5% category and kind of thing. So there will be a larger incidence of inverted duty structure. So larger, so net tax collection will fall down. That is the expectation of to happen. And another thing is that, as I mentioned, is that reduction of large number of tax rate will have an impact on GST collection. And all these effect, the positive effect, negative effect, how it is going to play out, it depends on how these benefits of tax reductions are passed on to the consumers, because the thing is that the GST rate restructuring and any changes, when it is increased, then it is immediately passed on to the consumers, and when it is decreased, the available studies shows that it is not passed on to the consumer fully, it is passed on to the consumer partially. And also it takes time to pass on this benefit, it's not instantaneous. So these all the effects is not going to be instantaneous, it will take some time, and how long, I don't have answer. Now the second point that I was talking about, the economic growth, let me first go through the what are the channels of through which economic growth is going to impact. Of course, there's a consumption effect as GST rate falls, as price effect and cross price effect, the consumption will improve, and then it will have economic growth, and that will again loop to the influence your income. It will have an impact on again increase your consumption growth. This loop will go on, and as Ruddani says that it loops will be somehow dampened over the say 8 quarters or 7 quarters. It depends on that how strong is this effect and how long this will go on. The second effect is basically investment. If the consumption is growing and my capacity of producing more goods and services is not there, so I will purchase input, basically capital goods in terms of plants, machinery and that thing, and it will have an impact on economic growth, and that will also impact my revenue collection as well as economic growth. That's the investment channel is very simple. Now the thing is that government expenditure. Now initially I think that there will be a fall in government expenditure because of the given that we have a FRBM target, and also revenue expenditure cannot be positive. Revenue deficit cannot be positive. So the possibility there will be in the short run, there will be a fall in government expenditure. It will dampen economic growth. But in the long run, due to the tax buoyancy and economic growth and other thing, we could expect that it will have an impact on economic growth, and it will be influencing our tax collection. And then the most critical part is the import side, because the thing is that please remember that, please all of us know that IGST rate is comprising of CGST plus SGST. So when the GST rates falls, my IGST rate falls at given the custom duty. So my imports will be much cheaper as compared to what was there in the earlier. So a part of rising consumption demand will fall on imports also, because some people have preferences for imported goods and services over the domestically produced goods and services. So it will dampen our economic growth. And but if it is the inputs or capital goods, because falling IGST will actually actually reduce my cost of production, and if I pass on this benefit to the consumers, it will improve my economic growth. So there will be two channels of imports, one through the final goods and another through the inputs and capital goods kind of story. But as Ruddani says, it will have an impact on my export also. But as I understand is that mainly the thing is that the both in the pre-GST rate restructuring and post-GST restructuring, it will be zero rated. All exports are zero rated. So in the tax side, tax reduction side, impact on our export, I don't think it will have a larger impact. But maybe that some other reason, as external demand increases or my cost of production falls, and that's why my exports become competitive and that thing, and then in that case my trade will improve kind of thing. So right now I'll come back to my empirical kind of thing. It's very small. I assured that you cannot see them from sitting in your seat. So, so, so the thing is that what I have done is that, and I have classified the 390 items of goods and services consumptions, 22, 23 into different tax buckets. I'm saying the tax rate, not tax rate, but tax bucket. But the reason is that in Indian GST rate fixation, we have all varieties of problems. Basically, it is the price-based fixation. Please remember that the footwear up to 1,000 or clothes up to 1,000 rupees, it was 5% tax rate, and beyond that it was 12% tax rate. Even the utensils made of say copper or brass attract high tax rate as compared to stainless steel and other aluminum kind of thing. So, and also even hotel stay and that thing. So it's very difficult. Basically consumption expenditure data is giving that how much consumption expenditure on say footwear and clothes and different kind. It doesn't say what is the price. So the problem is that fixation of the tax rate. So I assume that majority of the people, take example of the new GST rate structure, the threshold has been increased to 2,500 rupees. We all academicians can afford to have a cloth, one piece of cloth more than 2,500 rupees, or footwear more than 2,000. So I assume that majority of the people consume 5% tax rate kind of thing. So I classified both GST reforms and post GST reform tax categories into 390 items into different tax buckets. And if you see, the majority of the goods have moved to low tax bracket like 5% tax category, and all the other, except the exempted good, only 3 items are exempted, more exempted that thing, and other items we have a lower reduction of items into a higher tax category. So, so now the thing is that if we again club up this average monthly per capita consumption expenditure into both pre-GST reforms and post-GST rate restructuring, we'll see that earlier around 65% of the average MPC was under exempt to low tax category. Now it is around 75%. That means 2/3 of that was under attracting maximum tax rate of 5%, but now around 3/4 of that is attracting. So it will have a revenue impact, and it will be varying across state to state depending on their consumption pattern. And even this is happening both in rural and urban areas, and this kind of thing will have revenue impact kind of thing. Now coming back to graphical presentation, is that see, the majority of the tax bracket that we can see that it is low tax rate category is increasing, but higher tax category it is decreasing, except the very low like exempt to 5%. Basically now there is a confusion that, take example of paneer or something was people are consuming whether branded or package on that thing. But now it is quietly mentioned that it is now under 5% tax category kind of thing. So that confusion is relatively easier now to set the tax rate, but it is not fully taken away by the recent GST rate restructuring. Now, also, if you, I classified this average monthly per consumption expenditure across different factile classes, and all over all the factile classes, this is increasing, and that shows that it is not the lower strata or upper strata. Across all the strata, the exemption, the consumption basket will have impact of recent GST rate restructuring, and that will be having an impact on revenue as well as progressivity of the tax structure of GST. I think GST rate structure will be much more progressive now because majority of the tax are attracting lower tax rate, and if you see that majority of the consumers, the uppers, they are consuming mostly on the changes is happening mostly on higher tax bracket and nothing. Because I'm saying that this will have a price elasticity, income elasticity effect, so better not to do any kind of assessment of distributional impact right now based on 22, 23 or 23, 24. Better wait for another 1 year when the next round of the thing will come, then we'll have, it will be settled down and it will have a much better result kind of thing. Please, Pim. Please. Is it sort of towards lower Yes. There are that bias, but we don't have any better data. Mainly, I use the CPHS data of CMI CPHS data. They are biased in terms of urban coverage rather than the rural coverage. But since we have not seen the population, so it will be that we don't know what is the biasness of the NSO consumption expenditure. And we don't have such a huge sampling in any alternative sampling thing. But there is a perception that is a lower thing, and it comes from the poverty estimation and those kind of thing. So now I have done this for 4 states to, yes, ma'am. Yes, ma'am.
Small point that I thought is strange, or is that middle income group is seeing the maximum change in
Yes.
expenditure to lower tax.
Tax.
It's not the lowest end.
No.
It is those middle guys, and that I thought was a little unexpected in some regions. So in both rural and urban, the same thing is happening.
So it will. So if we can estimate the tax effective or say tax liability rate, it will be like USEF kind of thing. Maybe I'm not saying that. Maybe I can do that and see that. And interesting to see that what is the effective tax rate of these items and see how it looks like. Yes, right. I'll do that. And then I distribute the same thing I did for Bihar, Chhattisgarh, Goa, and Tamil Nadu. Chhattisgarh is the lowest among all the states in average monthly per capita consumption expenditure. Goa is the highest, and Bihar is somehow lower middle, and Tamil Nadu is the upper middle kind of thing. So, 4 states, for example, I see that how these changes is happening. So, change in the distribution, if you see, the larger change is happening in Goa in terms of lower tax. They are branching, the consumption expenditure is expressed, even if it remains same, that all the assumptions remain same, then it will be branching towards the low tax rate categories, both in rural and urban areas. As compared to Bihar, is almost the same like all India figures, and also take example of Tamil Nadu is also increasing. All the state it is increasing, but the largest increase around 15% change, 15 basis point, 150 basis point will be changing in the case of say in Goa and that thing. So it will have a revenue impact of on there in Goa. And what I have done is that to estimate the liability rate, I use two scenarios. Take example of if the lower middle is the my tax bucket. First, I assume that all the items falling under lower middle categories are attracting 5% tax rate. And the next scenario, I assume that all the items attracting lower middle tax bucket is attracting 12% tax rate, and it is the now it's kind of thing. Then I estimated the tax liability rate. Please remember that the average monthly per capita consumption expenditure that we see from the NSO, that is at the market price. So from there, if I assume that this is the tax rate, I can estimate the producer price, and from there I can estimate the tax liability. So then I have aggregated the tax liability in scenario 1. My tax liability is 165 rupees for a consumption of say uh, and please remember this, there are some items which are out of GST. Take example of petrol, diesel, CNG, electricity, alcohol. I have taken out those things because those are not currently attracting GST. So then I divided the total tax collection divided by the my net total or adjusted average MPC, then I am getting the estimated GST liability rate, that is 5 to 7% before the debt restructuring, and after the debt restructuring it will vary from 4 to 6%. So there is a possibility that in rural areas the GST liability rate is going to fall by 1%. And if we see the fall in say tax liability like 165 to 132, 231 to 191, this change is around 14 to 20%. That means my GST collection is going to fall 14 to 20%. But please remember that there is a tax saving. Say 165 to 32, this is a 33 rupees tax saving. Similarly, from 231 to 199, it is again 32 rupees tax saving. If these 33, 32 rupees are again consumed, I'm assuming these people will consuming this and they'll consume say mobile phone for a son or daughter, 18% tax rate category. Then my tax collection will fall between 11% to 16%. So similarly, I have done for the urban areas and same thing like 12 to 16% fall in GST collection, that this is estimate my provides. Please, and yeah, as you know that this is full of assumption, static, there is no income effect, there is no other things I am assuming. And there are rural, so even the state specific effect, if we assume the, I can say that there will be impact will be much higher for Goa, but most of the state it will be ranging between 14.2% or say around 13% to around 22% or 25% kind of thing. So there will be state specific impact first of all, and it will depend on the consumption basket and the composition of the consumption basket, also scale, and it will be different for different state and also rural urban. So now there are different revenue impact assessment is done by different agencies and that thing, but I'm not putting a particular number or saying that this will happen, but my understanding is that 11 to 16% is a very not very big out of the box assumption, and 11 to 16% fall in GST collection is quite in line with the other things, and I don't know about the methodology others use. So this is my methodology, and with that, the also how it will impact the state finances is also depends on what is the dependence of state GST on own tax revenue. So on average for major state, the 43% of revenue, own tax revenue is coming from say state GST, and for minor state it is around 61%. So larger dependence is Assam, Bihar, then Maharashtra, Haryana and Goa. Their dependence on GST revenue is much higher. The Bihar, the reason is that there is no alcohol tax because around they are losing around 7,000 crore annually, and that makes them dependent on higher dependence on state GST. But some states, the lower dependence is there. Take example of say Andhra Pradesh, Chhattisgarh, Telangana, Tamil Nadu, and Uttar Pradesh kind of thing, because there are lots of revenue is also coming from other sources like state VAT and also alcohol taxes and also like that. So with that, there's a possibility of backloading or front loading this revenue impact. How state will manage with this kind of thing, it depends on state plan for revenue management and also fiscal public finance management. Is up to the state how they will do that. With that, I conclude. Thank you.
But the state GST, not the central.
Sir, basically the thing is that this is the comprehensive GST of the this figures. The figures I am taking of the state GST with IGST settlement on SGST account, but not the central GST transfer. CGST nahi.
But if you're looking at the initial slide, that is
Compressing the comprehensive GST.
impact on prices, etc.
Everything is all comprehensive GST.
So it's only when state-specific effects are being spoken about that.
And the thing is that when the central GST falls, it will have a impact on state finances also because of the devolution side, and also the IGST collection on the import side, that will be also have a spillover effect on state finances, because IGST, when I am bill of shipping is come to ICE gate thing, they have to mention what is my destination state, and IGST will be settled with the destination state kind of thing. So there will be a IGST impact on settlement impact on SGST account also.
Professor Rao
Sure.
for comments.
Thank you. There are basically 2 or 3 comments that I had, which I think at some points we've had a chat with, but we should. I'd like to have your thoughts on this, because let me start with the results from Rudrani's analysis. So change in tax rate produces a reduction in tax rate produces an increase in consumption. A 1% percentage point, I presume, reduction in tax rate produces 0.7% increase in consumption. Now, a 1% change in tax rate for GST, if you assume the average tax rate is 10, it becomes a 10%, 0.1, and consumption is increasing by 0.7. So the net effect on revenues is positive. Yeah. Whereas when Sachi is doing his analysis, we are getting exactly the opposite story. So my question, therefore, to go back to how consumption responds is, do we assume or do we work with the premise that marginal propensity to consume adjusts to changes in tax rates? Or are we working on largely under the premise that changes in tax rates results in a redistribution of consumption given what you would like to consume? So the two will give us completely different results. And so that, I think, will change how we look at impact on revenues. Why I am concerned about it is, if we go on increasing tax rates, will we have consumed our whole income? Or reducing tax rates, will we have consumed our whole income? And therefore, are there models? I haven't done my homework, I guess. Are there macroeconomic studies which are modeling MPC, marginal propensity to consume? What factors influence it? I understand that direct taxes are straightforward connected, but do we have a story for connecting indirect taxes as well to MPC? And therefore, what is the impact that we expect to see? Because when we look at it commodity by commodity, it is easy to see elasticities playing out and therefore increase in demand, but we can't presumably be expecting it across the board. So that's one question I have, which it'll be interesting to ask, find an answer for myself. The second question comment is related to the idea that the pass-through will be complete and pretty much instantaneous. In market structures can change how much of the pass-through is actually reaches the consumers. When GST was first introduced, we had this draconian provision of anti-profiteering authority, which was supposed to impose discipline on market players. Clearly, that's not a working model. But do market structures matter? And therefore, will the pass-through be complete or incomplete? Can make a lot of difference to whether the consumer gets the additional income or whether the producers get the income. And therefore, will it result in higher profits and higher capital market appreciations, or it results in more investment? So that is the second element. Recently, I was told there's a paper by Pulak Ghosh and Pierre from World Bank. They took some data from Karnataka for commodity-wise for some supermarket chains, and also in GST returns-wise. And for, I think, 1.5 years after, till 1.5 years after the introduction of a rate change, pass-through was 30-35%. So the rest is not passed forward, which then changes a lot of what we are inferring about the impact of GST. So that is a second thing which I think we have to find a way to ask in some manner in order to be able to better understand the final impact. So if pass-through doesn't happen, then the government loses out. The consumer doesn't benefit. The producer benefits, which is a completely different configuration to. The third is elasticities of how responsive are which bundles of commodities to changes in prices. So if you're looking at the exempt category or adding more commodities to the exempt category, are they more sensitive to change in price, and therefore do we expect to see significant increase in demand? Or do we expect more elasticity at the higher end on what we are calling luxuries? Does that have an impact on revenue generated and therefore everything else? The last question perhaps can be explored a little bit within the NSS framework. If we were trying to do elasticities for different income classes, or we were doing elasticities for different commodities, commodity groups, to understand whether they're equally sensitive to changes in prices and stuff. And that might add a nice layer of detail to the likely impact. For the earlier versions of GST rate reductions, the general idea seems to be that pass-through is incomplete, so the consumers don't benefit as much, which effectively translates into a lackluster response in terms of demand and in terms of stimulus to the economy. So it'll be good to explore some of these things if they appear feasible. I'll stop there. Thank you.
Thank you. Thank you. Those were very, very precise and very, very good. Would you want to respond
Yeah.
to them? Yeah.
On mainly on what I understand, Madam, on your uh, observation on MPC versus restructuring of consumption from one commodity to another commodity. So what I assumption, my understanding is that the consumption is kind of we used to do in the thing is that a part of consumption is a C equal to C cap or C bar plus MPC multiplied by YD. So a part of consumption is basically is constant, that we cannot change, and a part of the consumption is dependent on your disposable income, and MPC comes there. So now the one way of assuming that MPC adjusts to the tax rate, how that is adjusting, and then we can do that. We can do that by taking the CPHS data uh, with uh, uh, pre-GST reforms and post-GST reform kind of thing, and commodity-wise tax rate, if we multiply and then can see that what will be the impact of that on MPC, marginal propensity of the same commodity or same group of commodity kind of thing. But restructuring also happens. Basically, when you have larger disposable income, even given the disposable income and the tax rate, did you say you have the larger purchasing power? Suppose the biscuit packet of 10 rupees earlier you were getting only 100 gram, now you are getting 120 gram. You don't need to buy 4 packet, 3 packet perhaps will be in a month will be enough. So another 1 packet of 10 rupees you can spend on some other goods kind of thing. That kind of restructuring could happen, and also MPC could happen, but it's all empirical exercise to I think in that way how we can do it in empirical way. And right from the effective GST liability, yeah, that is then pass through will be and my understanding about, take example of the corporate reduction, tax reduction. What was the basic assumption of corporate tax reduction? That it will boost our investment. If it is not boosting our investment, then how it will do that? That if I pass on this corporate tax reduction in terms of lower prices,
No, corporate tax, basically lower corporate tax means
larger tax flow,
it basically means more retained profit.
retained profits,
Without NHA is producing higher profits,
higher profits.
post-tax profits, and that itself should be incentive to invest.
Invest, or that will boost our consumption growth if they consume, or if they pass on this thing benefits to the consumers in terms of lower prices, then it will boost my consumption growth also. Or it is the lower the wages, higher the wages and salary again come to the people.
Where from that channel, usually it's not argued to go as lower price to consumers. It is supposed to, stimulate investment because for the same value of output, you're getting higher profits.
Yeah.
And so you should invest more because it's a profit.
But our investment, corporate investment, private investment to GDP ratio is stagnant for the last, say, around from 2011-12. So it's, and your finding is that their passive income share is increasing. So perhaps this additional cash flow that profit they are investing in stock market or parking somewhere, but not investing in their business. So that is my, the same thing could happen here also. So additional thing, they park on somewhere rather than benefiting, passing on the benefit to the consumers. That could happen. So at the cost of government revenue, somebody else can benefit that thing.
Actually, with digitization, there's been a lot of retail investors, small little savers who've been parking money in mutual funds and stock markets. It's really so.
Yeah.
No, corporate India also is sitting with these special funds where they choose not to invest, but they have a lot of passive income, which means they are investing in bonds of other companies. What was spoken about in the morning.
This morning,
Private placements and
this question before we address this morning is that he was saying that the private investment cycle, and not all the passive stuff, the actual investment has started dividing. I don't know, that's what you said. In which case,
some turnaround is
actual private investment, not financially. But we don't know, and that's what.
But with respect to GDP, it is increasing, share is increasing? From. But if we compare the private investment in national account statistics for the from 2011-12 to latest figure, is completely stagnant.
Yeah, that's been the general story. At the margin, it's saying.
The national accounts, it's a bit back.
Yeah.
It's still 23, it's not even 24, 25 values are there. So, I think.
Yeah. But even now, State Bank of India, if you see that in case of last economic survey, there's a specific, they have pointed out, they have done a survey, a study. And for the NSE top 500 companies and investment and that thing. And they also found that there is no increase of investment and that thing. And also passive income in there, they have found that increasing kind of thing. So,
So, but in the morning also, I say, and it's this topic. So, what I found, and also there's like a promotion studies that private investment is actually this when there is a public investment, you have to say high. So, private investment also responds to it positively. So, there is a private effect. So, I'm more confident in investing when public investment.
it's good, na? If everybody is investing, our economy will grow, na?
Private is also up. So that's like very, but since the public does sustain for long, so it is. And what is completely flat is because after 22, this thing was, private was flat. Public was high in 24, but private was flat. You don't know when what happened at this thing. This is based on only the project values. And what we found is that this project balance, updated project balance, very strong, was still indicator for investment chips here. So that's on the basis of that, because
Yeah, that's good enough.
any questions?
Comments actually, I think you said at some point that if there is this new fall, decline in public expenditure for the FRB. Now, again, some of the data I'm showing is that public expenditure is not very sensitive to changes in revenue. And most recently, it's the FRBM has been overridden by this change in the last year. The budget, instead of looking at the fiscal deficit, they're going to look at the debt GDP ratio and not annually, but have a target debt GDP ratio in 29-30. And as you know, because the debt GDP changes very, very incrementally compared to the fiscal deficit. So the question that we addressed this morning is if there's a fall in revenue, it can have two effects. One is that it can reduce expenditure, which is what was. The other is that it can be allowed to increase the deficit and not cut the expenditure.
But the problem is that increasing the deficit at this point of time, take example of the state forum, I had a discussion of the several, take example of Rajasthan and several other states representative, they are thinking to approach the union finance minister and the union government to increase the 0.5% more leg room for fiscal deficit, mainly due to the GST this thing. So now if the union government allows them to have 0.5% additional fiscal deficit, then there will be no impact on the GST. But if we take FRBM as a very sacrosanct, basically 0.5% for capital expenditure, 0.5% for GST rate restructuring, then 0.5% for something else, then it is not a very FRBM then target. There will be something else. Now the thing is that if we take the FRBM as very target, then it will have an impact on GST, basically government expenditure side.
Let me repeat what I'm saying. The framework.
The framework doesn't hold for the center, but the states are still bound by the.
Maintaining for the state.
Yeah, basically, central government is free float. Central government, who is going
Now
to?
they found official way of doing the free.
The central government.
Constitution is about the states.
Yeah.
Yeah, so central government, I think, stated on being where they stated they will be.
4.5% is the target, right?
Said in the budget it's 4.4, they'll be at 4.4. The rest can go
That
down.
has been a record for the past
Yeah.
6 years.
Go down. So next year things may be different.
Framework change currently.
Then announcement नहीं करेंगे वो. But currently she is not going to.
This is about state.
Yeah.
I am talking about state only. Mainly the impact will come the state finances only, my understanding, because the thing is that this, take example of the union excess duty. Central excess duty is giving lots of revenue and tobacco, mainly for the other things like tobacco and all these things is excise duty, additional excise duty and that thing is giving lots of revenue. And if the crude oil prices fall, then it will give additional revenue to them. So
Manisha's presentation also had excise was the head that was doing the best in terms of revenue performance. So, and that doesn't get shared with the state. So the bulk of the GST impact is actually on the state. 71% is straightforward. 50% goes to the states. 40% is.
Excise duty is that part of the federal
Duty or cess?
Cess is not. But excise duty is shared.
yeah, excise duty, but excise duty also if you see that sales component in excise duty is increasing in there. So that is another thing. Okay.
So, if we come to the end of the session, very interesting,
very rigorous analysis being presented here. Just a couple of points, which I wanted to sort of highlight. One would be, it would be great to look at intermediate goods production and, pass through and all that. Yeah, sure. Yeah. The second would be exactly the points made by Maushami about looking at, because with tariffs, there are some sectors, very labor intensive sectors that are much more adversely affected, leading to unemployment. So, that heterogeneity across sectors and especially labor market outcomes. The third would be the impact on the current account balance, and vulnerabilities, especially because, exports will have some inertia in terms of, getting boosted and, going forward with lower GST and increased competitiveness. But imports will sort of, but imports might increase immediately, right? So
Our if real exchange rate depreciates,
Yes.
so appreciates, sorry.
Depreciate.
Depreciates,
Yes.
then we are going to
no, appreciates.
then we are going to
Have higher imports.
The imports
And-
and also there is a GST component.
Yeah.
If GST rate falls, then also the import will be cheaper.
Yeah. So, but imports might flow in, but akin to the J-curve effect, exports may not pick up, immediately. So with all of that, there could be a lagged impact. So some of this, effects.
So challenging to.
Yeah. Yeah. So just a few things that I thought I would, put on the table. Yeah. Thank you very much.
And thank you for taking the time
No.
and being with us.
No.
And thank you very much, Maushami,